Welcome to the video lecture series of Project Development and Research Management. Course code MC301, Contact Hour 4, Credit 4. This is lecture 16. Myself, Dr. Shunipa Roy, Head of the Department, Electronics and Communication Engineering, Guru Nanak Institute of Technology. So this is module 3. Cost classification, fixed cost, variable cost, semi-variable cost, cost of capital, capital budgeting, master budget, direct and indirect taxes. We have already completed the lecture on cost classification. Here we will discuss direct and indirect taxes. What is tax? So let us move to the next slide. Taxes represent the amount of money we pay to the government at predefined rates and with periodicity. Actually, we have to pay the amount at a regular interval to the government. Taxes are the basic source of revenue to the government, using which it provides various kinds of services to the taxpayers. There are mainly two types of taxes, direct tax and indirect tax. So let us discuss about the disadvantages of this scheme, that is tax pay. Poverty problem may occur in the country. Government policies may need to be rejuvenated. Lack of education may arise. Large-scale import may get hampered. Law and order also may get hampered. Fluctuated foreign investment may get hampered. Privatization is more prone and moral culture may be reduced. So, what is direct tax and what is indirect tax? Actually, direct and indirect taxes are governed. Direct and indirect taxes are governed by two different boards. Central Board of Direct Taxes and Central Board of Excise and Customs. So direct tax, what is direct tax? A direct tax will refer to any levy that is both imposed and collected on a specific group of people or organization. An example of direct taxation would be income taxes that are collected from the people who actually earn their income. On the contrary, indirect tax, if we consider, indirect taxes are collected from someone or some organization other than the person or entity that would normally be responsible for the taxes. So here are the examples or difference between direct and indirect tax. Some examples of direct taxes include income tax, taxes on assets, that is property tax, assets and real property and personal property also. All these are grouped as a property tax. These are taxes that a person must pay directly to the entity collecting the tax. The taxpayer is not able to shift the burden of these taxes onto another individual or group. Indirect tax, if we consider, one example of an indirect tax is sales tax, which is imposed entirely on the buyer rather than both on the seller and the buyer. Indirect taxes are taken from stakeholders that are generally not thought to be entirely responsible for the amount being taxed. So there are some pros and cons of direct tax. Equitable. Equitable means the burden of direct tax cannot be shifted, hence equality of sacrifice can be attained through progression. Of course, the very low incomes can be exempted, and this cannot be achieved by taxes on commodities which fall with equal force on the rich and poor people. The tax raises the price of the commodity, and the price of a commodity is the same for every person, whether they are rich or poor. Economical. Their cost of collection is low. They are mostly collected at the source. For instance, the income tax is deducted from an official's pay every month. This saves expense. The employer acts as an honorary tax collector. This means great economy. Certain, in the case of a direct tax, the payers know how much is due from them and when. The authorities also know the amount of revenue they can expect. There is certainty on both sides. Certainty minimizes corruption on the part of the collecting officials. Elastic. If the state suddenly stands in need of more funds in an emergency, direct taxes can well serve the purpose. The yield from income tax or death duties can be easily increased by raising their rate. Productive. Another virtue of direct taxes is that they are very productive. As a community grows in numbers and prosperity, the return from direct taxes expands automatically. A mean of developing civic sense. It is another virtue. In the case of direct tax, a person knows that he is paying a tax. He feels conscious of his rights. He claims the right to know how the government uses his money and approves or criticizes it. Civic sense is thus developed. He behaves as a responsible citizen. So direct tax, some disadvantages also. Inconvenient means the great disadvantage of direct tax is that it pinches the payer, and evadable. That means the assessee can submit a false return of income and thus evade the tax. There is also this possibility. That is why a direct tax is a tax on honesty. There is a lot of evasion. Many of those who should be paying taxes go scot-free by concealing their incomes. Next is arbitrary. If taxes are progressive, the rate of progression has to be fixed arbitrarily. And if proportional, they fall more heavily on the poor. Thus, both are bad. The rate of taxes depends upon the whim of the finance minister. This is arbitrary. Convenient. Indirect tax on the other hand is convenient. They are convenient to both the taxpayer and the state. And the taxpayer do not feel the burden much, partly because an indirect tax is paid in small amounts and partly because it is paid only when making purchases. So broad-based, indirect taxes can be spread over a wide range. Very heavy direct taxation at just one point may produce harmful effects on social and economic life. As indirect taxes can be spread widely, they are more beneficial and suitable. Easy collection. Collection takes place automatically when goods are bought and sold. A dealer collects the tax when he charges a price. He is an honorary tax collector. The poor can contribute. This is the advantage, that they are only means of reaching the poor. It is a sound principle that every individual should pay something. So however little to the state, people are able to pay the taxes, and that's why a responsible citizenship mind can be generated into them. This is non-evadable. They cannot be evaded as they are a part of the price. They can be evaded only when the taxed article is not consumed. Elastic. They are very elastic in yield, imposed on necessaries of life. which have an inelastic demand. Indirect taxes on necessaries yield a large revenue because people must buy these things. Equitable, when imposed on luxury or goods consumed by the rich, they are equitable. In such cases, only the will-to-do will pay the tax. Check harmful consumption. By being imposed on harmful products, they can check consumption of harmful commodities. That is why tobacco, wine, and other intoxicants are taxed. There are some disadvantages of direct taxes also, that is uncertainty. What is that? Unless indirect taxes are imposed on necessaries, we cannot be sure of the revenue yield. In the case of goods with an elastic demand, the tax might not bring in much revenue. The tax will raise the price and contract the demand. When the things is not purchased, the question of the tax payment does not arise. Raising prices unduly. They cause the price of an article to rise B more than the tax. A fraction of the money unit can be calculated. So our middleman tends to charge more than the tax. This process is cumulative. Uneconomical. The cost of collection is quite heavy. Every source production has to be guarded. No civic consciousness. These taxes do not develop civic consciousness because many times a taxpayer does not even know that he is paying the tax. Harmful to industries also. They discourage industries if raw materials are taxed. This will raise the cost of production and impair their competitive capacity. So these are the references. If needed, they can follow the references. Reader or viewer can follow the references. If there is any question, feel free to ask me to this email ID. Thank you.